Hello everyone, welcome to today's video. Today we are going to be talking about Tesla, and my oh my, Tesla has been on a roll lately, currently at around $518, down 3.5% today though, so that might spell some trouble. But today we're going to talk about Tesla, we're going to talk about if it's overvalued and what we should be valuing Tesla at. So as everyone knows, Tesla has been a rapidly growing car maker. As we can see here, back in 2017, Tesla actually passed Ford in terms of the size of their market cap, even though Tesla only sells a fraction of the amount of cars Ford does. I think Ford sells around 10 million cars a year, and Tesla has only been doing a couple 100,000. So that tells you how much people are valuing Tesla and the future potential it has. Again, we can see Tesla's a fast grower. Their quarterly deliveries of cars are just exploding. And when a lot of people see a company like this with exploding revenues, and when people see a company like this with exploding revenues, most of them just want to jump on the stock as early as possible, thinking it's going to be the next big thing. So let's talk about the auto industry in general. In general, the auto industry is pretty lousy. It's increasingly competitive. There's countless numbers of car brands out there now. Car companies have very low margins, sometimes even negative. Some companies lose money for each car they sell, even if that seems like it doesn't make any sense. There's very limited opportunity for growth. It's hard to capture more market share in the auto industry. The auto industry is extremely cyclical. The amount of cars sold every year goes up and down depending on the economy, and there are increasing regulatory concerns like Congress demanding that cars meet certain environmental standards, and we have union disputes like for General Motors, the union strike there, and that is putting some strain on the auto industry. Here's a long-term chart of auto sales. You can see it goes up and down over time. And again, like I said, auto stocks are generally lousy performers. So we can take a look at a few. We have Ford here, General Motors, Honda, and I mean what you see is these stocks don't really do much. They sort of just go sideways. Again, Nissan, and long-term history tells us these stocks are not really something you want to be buying. They have some decent dividend yields, but besides that, you're going to be holding them to make 4 or 5% a year in dividends. It's not really worth it to me. So that brings us to Tesla. And here I listed a few of the concerns with Tesla. And before I go over any of these, I just want to say that I'm not hating on Tesla. I think Tesla makes outstanding products. I think Elon Musk is a pioneer in pushing the limits to what humanity can do. I'm a big fan of Elon Musk. I'm a big fan of Teslas. Teslas are, I want to drive one eventually. So, they're one of the coolest cars out there right now. But again, that doesn't mean that everyone should be pouring their money into Tesla stock. So let's go over these. First of all, Tesla is an auto stock, no matter what people tell you, but it is valued like a tech stock. Tech stocks are usually valued at high multiples, but it's because they have huge margins and they're growing rapidly. Tesla, on the other hand, while it does have the growth, doesn't have the margins, and they're not even profitable yet. Another thing with Tesla is, since their margins are so low, what they've been doing is they've been reducing the prices on their new cars, and they keep dropping the price lower and lower, and because of that, they're not going to be increasing their margins anytime soon, because any cost they save in production will just be passed on right to the customers. You see Tesla taking on excessive debt to expand production. They're making the huge gigafactory in China and in India, I think. But the thing is, more production of, we see Tesla's margins are extremely slim. More production of these cars will not ultimately mean more profits for Tesla. That's what a lot of people have this assumption. Once once Tesla produces and sells X number of cars a year, that's when they'll be profitable. I don't see it that way. I see it as, they're not making any money now, and even if, at 300,000 cars they're not making any money, if at 5 million cars, I still don't know how much money they'll actually be making. Like I said, taking on excessive debt, we can check here. This is FinViz, and right now Tesla's debt to equity is over two. So that's not really a good sign for any company. And again, their long term debt is 1.87. So most of this debt that they're taking on is long term debt, which is something that will probably hinder their growth in the future. So Tesla having trouble maintaining profitability. They have been profitable for a couple quarters, but again, it's not they're not reliable at all in terms of predictably measuring how much money they're going to make. We can check out their income statement. This is Tesla's income statement, and if we go down to net income, you see they're just bleeding cash. This is the 5 year trend. So each of the last 5 years, they've been losing massive amounts of money, and it doesn't seem like it's getting any better. The past 2 years have been the worst of the past five in terms of negative income. So definitely not a good sign for Tesla. Negative returns. So as value investors, an important number we like to look at is ROI, or return on investment, and ROE, return on equity. And we see Tesla has a negative return for both of these. And basically, return on equity is the company's net income divided by the total amount of equity they have. And like we just saw, Tesla's not making any income. So that pretty much explains why their return is negative. And another thing we'll see here is they have increasing competition. So the last couple of years, Tesla has been pretty much dominating the electric vehicle industry, and what we see now is more car brands are entering the industry. We see the Ford is making an electric vehicle. We see BMW and Audi, and as much as people say Tesla's always going to be on top of the electric vehicle industry, there will be competitors that have some pretty nice cars. I have to say the Audi e-tron looks pretty nice. So that's something you have to watch out for. Another thing, the electric vehicle numbers. So basically, everyone is projecting that in the next 20 years, every single person will be driving an electric vehicle, and I honestly don't really see that happening. I think change all throughout history, change takes a lot more time than most people think. And electric cars are expensive, and most people don't have money to be spending 40 or 50 grand on a new electric car when they could buy a used Honda for like 5,000. So unless the government makes it a necessity to drive an electric car, I don't see even over 50% of cars on the road being electric within the next 20 years. And lastly, CEO issues. Look, guys, I love Elon Musk. He's like a role model to me. I admire what he's doing with Tesla and SpaceX, but there's a difference between looking up to someone and essentially trusting them with your money. And the fact is, Elon Musk is doing way too much right now, in my opinion. He's CEO of like four different companies. He spends half the week at Tesla and half the week at SpaceX. So half of every week he's not even focused on the company. And that's a problem to me. If I invest in a company, I want the CEO to be 100% dedicated to moving the company in the right direction, to make me more money. Ultimately, that's why I invest. And so when I see something like this with Tesla, with Elon Musk running a bunch of different companies, it makes me wonder if he's even the right person to be CEO of Tesla, or if he'll step down and they'll hire someone else in the future. That's something to think about too. So, as you know, this channel focuses on value investing. So Warren Buffett has these 4 rules, and to invest in a stock, it has to pass all 4 of these rules. I found an article on this right here. It's by the Investors Podcast. they have a podcast on like the iTunes or Android. So I usually listen to them when I'm in the car when I'm driving. It's a pretty good podcast. I've learned a lot from it actually. So um, yeah, I definitely recommend it. I'll put a link to this article, but this basically just talks about the four rules, and so the first rule is the stock must be managed by vigilant leaders, and you know, I already talked about how Elon Musk is not necessarily 100% focused on Tesla. In addition to that, he's not really the most trustworthy person either. All of his companies rarely meet their deadlines, or when Elon Musk says they'll have a project finished by. Um, Tesla's been taking on excessive debt, as I've said. Something the leadership team should do in any company is closely watch, not take on excessive debt, to not hinder their future, essentially. And that's what I'm afraid Tesla's doing. Second, a stock must have long term prospects. Again, the growth in Tesla will always be there. They're a rapidly growing company, but even though they're selling more cars, doesn't mean they're making more money. And everyone assumes that at some point they'll become consistently profitable, but I'm not going to believe it until I see it. The auto industry is just too competitive and the margins are too small for me to just assume that Tesla's gonna break a profit once they start selling more cars. And the third one, this is probably, I would say, the biggest problem for Tesla. A stock must be stable and understandable. And Warren Buffett says this all the times. He invests in stocks that he knows their earnings will grow every year, and he knows every year the company will make more money than the year before it. And that is absolutely not the case with Tesla. With Tesla, we see their cash flows all over the place. A couple of quarters they're profitable, other quarters they're burning through cash. And the reason Warren Buffett only invests in companies with solid, growing, consistent earnings is because that's what he uses to estimate the intrinsic value of these stocks. The only way you can estimate the value of something is if you can accurately predict how much money it's going to be making. And if a stock like Coca-Cola, one of Warren Buffett's favorites, if you can say it's growing consistently at 10% a year, you can project that into the future and make a reasonably good guess on what it'll be worth in the next 10 to 20 years. With Tesla, you can't do this, however. People have no idea how much Tesla is going to be making in 2 years, let alone in 10 years. So because of that, Tesla definitely fails this rule of investing. Again, in this article, something I think is important right here, when a company's profits look like a yo-yo, it's typically impossible to value. And again, this is because valuing involves projecting the amount of money a company will make into the future and then discounting it back to present value. And when you don't have consistent numbers to accurately predict the future, it's impossible to do this. And lastly, a stock must be undervalued. So this is the last rule, and typically you can only move on to this one if the previous three have been met, which in my opinion have not by Tesla. So in valuing a company like Tesla, for me, this is where I stop. I don't even attempt to come up with an intrinsic value for a company like Tesla because, again, it's not stable. The long-term prospects are murky at best, and I don't really trust Elon Musk managing Tesla in the future. Um, so that's where I am with that now. And now let's move on to the next issue, which is Tesla in a bubble right now? And Tesla's just been on a tear in the last 5 or 6 months. It's up 190%, which is just insane. And the thing you have to realize when prices go up this much is that nothing has fundamentally changed in the company. The stock price has gone up almost 200%, but is Tesla making 200% more money? Are they selling 200% more cars? And the answer is no. That's really important because what Warren Buffett always says, price is what you pay, value is what you get. In my opinion, the company's no more valuable than it was in, say, July when it was at its bottom of around, I think, 180. Nevertheless, because all of the positive news reports on Tesla, the stock has just skyrocketed. And so Tesla is definitely in a bubble right now. There's no way around it. The price just keeps going up every year. People keep buying, buying, buying. And I feel bad for people that are going to get caught at the top, because when bubbles happen like this, the stock keeps going up and up and up, and people buy until it stops going up, and then after that, people start panicking. People don't give real thought to what it's worth in the first place, and once it starts going down, everyone starts selling. We saw the same thing with Beyond Meat a couple months ago. It went from $280 to around 70, $75. So I fear that the same thing will happen with Tesla eventually. Anyone buying Tesla now is either anyone buying Tesla now just doesn't understand what insane valuation this is. I mean, we can go back here. The PE of Tesla right now is 91. That's pretty much unheard of. That's PEs like in the dot-com bubble, when literally worthless companies were being valued at billions of dollars. And so, and even people that say only buying and holding Tesla for the long term, when they buy at this price, even if Tesla makes money and they're moderately profitable, they're probably never going to be worth $518, at least for a very long time. So if people are buying now and they say they're going to hold the stock through all the up and downs, it's once this bubble pops and the stock comes crashing down, it probably will not reach over $500 again for a very long time. And so this begs the question: is there a good price to buy Tesla at? When Tesla was at $180, should people buy it then? And the answer, I would say, is still no. It doesn't pass any of Warren Buffett's of rules for investing. And even at $180, I still don't think that's even close to what Tesla is really worth. Even though I said I wouldn't put a value on it, I would say somewhere under $100, honestly, if I had to. Somewhere under $100 is what I would say the value of Tesla is. So even if the price goes back down, I still would never touch the stock with a 10-foot pole. It's just too risky for me. There's too much unknown about the future of the company, and I would not risk putting any of my money in it. Warren Buffett's number one rule: don't lose money. And when you put your money in a stock like Tesla, there's no guarantee you won't lose it. And so that's why I would never invest in a speculative growth stock like this, like Tesla. And again, I'm not hating on Tesla or Elon Musk or anything. I love the cars. I love Elon Musk, but I feel bad. I just don't want people to be scared of missing out on this apparent great opportunity. And especially I see all these YouTube videos of people talking about Tesla like it's the greatest thing ever, and it's going to keep going up, and it's going to reach $1,000. And I just think about people that don't really know much about investing watching these videos and thinking it's a good idea to put all their money in Tesla at the top, which is definitely not a good idea. When you put your money in a company, you need to really think about if it's a good investment, and this right now is definitely not. So I'm open to criticisms of this video or comments. Leave them down below. If you agree with what I think, if you disagree, leave your reasons. I'll be sure to get back to you. And that's it for this one. Be sure to like the video, give it a thumbs up to get the word out to people that they should not be investing in Tesla now or probably ever. Yeah, that's it, guys. Be on the lookout for the next video. I'll post one probably tomorrow, and I'll see you then. Bye-bye.